they can either print more and then people run after gold, or they can print nothing and then all the debt defaults. And then what happens then is that the money supply shrinks so drastically as the defaults go in a domino effect, chain by chain by chain, all the way back to gold was $35 an ounce. We end up with gold at $35 an ounce, except its purchasing power in dollar terms goes through the roof in the same way. A lot of gold people, gold and silver stackers, don't quite understand, and it's hard to really internalize it, because it's very scary, and you think that one path is failure and the other path is success, but they all lead to the same thing.
Gold prices soared to new heights this week, with the precious metal rising by more than 5%, last trading above $2,150. Rafi Farber highlights that silver also rallied, last trading at $24.30. The pulsing 9% rally in silver saw it outperform gold to the upside, with the gold to silver ratio falling from 92 to 89 in the past 5 trading days. The sharp move higher in precious metals occurred despite the calm in equity and FX markets, with the American index rising 1% for the week. Gold also rallied despite lukewarm sentiment and modest investor positioning, which bodes well for the price outlook, said Rafi Farber. The momentum continues across the board, including Bitcoin, which just reached new all-time highs this week as well. Now we'll show you excerpts of the latest Rafi Farber interview talking about the recent gold price breakout and sharing his price prediction for 2024. But first, hit the like button, smash the subscribe button, and turn on notifications bell, as those who watch our channel make better decisions as they're better informed. Enjoy the video.
It's not about dollar profits, right? It's not about earning dollars with gold. It's about having gold, having money, having gold and silver. It doesn't have to be gold. It can be silver. It depends what you can afford. It depends what you want. But you need some money. And it's not a thing that you want to like take a position in and then try to sell it for $1 profit and then calculate how much stuff you can get with those dollars. It's about, you get a paycheck, right? And you're paid in fake money. So take some of that paycheck and get some silver and do it every month, and don't even look at the price. It doesn't matter. And I will say this, that I've noticed, that I also wrote this on the Endgame Investor, that the all-time highs in gold, they are not being reflected in the physical markets. I don't think, from the premiums that I'm seeing, they're falling, and they're not being reflected in the ETFs, meaning the retail investors are not really part of this, it seems, because if they were buying GLD there would be inflows of gold into GLD, but they're still flowing out. So what this seems to me to be is a banker war between banks and maybe family offices. It's focusing on the futures market, and that's where the big money is. They don't mess with ETFs. They're not retail investors. Some big money does, but most of it is in the futures market because all the leverage is there. And we saw this leading up to March 2020 for about a year. Open interest was just heading higher and higher and higher and higher. We're coming off a low in open interest in gold. Open interest is the amount of contracts that are open. We got up to something like 800,000 on the eve of the lockdowns. And open interest is up something like 60,000 contracts. I think it's like 15% of the total open interest from 3 days ago, over the last 3 days. So there's some kind of bank battle going on here, and the stackers are not really involved. They're on the periphery right now. When they get involved, price will go much higher. They're not involved right now, so I don't see this rally stalling anytime soon. That I listen to, and I'm not a technical trader, so I listen to technical traders because that's not my talent. I just want to know what they think, because that's how they see the market. So when I listen to them, they're like, they say, look, I'm a technical trader, but I understand fundamentals also, and I can't understand why gold isn't just heading straight up from here, because the world is insane. And when the world is insane, people go to gold and silver because it's grounding, and they want to have something in their hands that they can feel and know that they can wake up tomorrow and it'll still be there. So they're kind of losing it, and they don't understand. And frankly, neither do I, but it's okay. I know everything's on a delay. I know what's going to happen later. So yeah, and on the one hand, I'm surprised. On the other hand, it's about time. And we're living in that dialectic until bam, something happens. And then you wake up the next morning and gold is like 10, 15, $20,000 an ounce and your dollars can't buy anything. Could it be tomorrow? I don't think it's going to be tomorrow, but it's going to be one of.
On today's market recap, silver surge sparks speculation over potential super squeeze. Silver has recorded its largest gain in months, sparking plenty of excitement on social media and other investment platforms that the move may be the start of a prolonged price rally. Rafi Farber highlights that silver is not Bitcoin, but while supply and demand fundamentals explain much of the move in Bitcoin, it's drawing along to suggest that has implications for the silver market. There's no halving of supply impending, while demand is largely reflective of trends in industrial and jewelry manufacturing. Rafi Farber also talks about the gold rally, but the move in precious metals comes across as momentum rather than fundamentally driven, at least in the near term, meaning it could reverse just as fast as it started. Gold and the silver price have been surging in the last several trading days as markets expect the start of rate cuts, which is driving cash from bonds to commodities. Now we'll show you more clips, but first, subscribe, and turn on notifications. Also, check our link in description for some massive sign-up bonuses. Enjoy the video.
A lot of gold people, gold and silver stackers don't quite understand, and it's hard to really internalize it because it's very scary, and you think that one path is failure and the other path is success, but they all lead to the same thing, and that is, well, if the Fed decides to inflate more, then a run on the central bank is the equivalent of New York Community Bank Court depositors taking dollars out of their bank, but a run on the Fed is taking our money out of dollars, right? That's a saying that it's hard to register because dollars are money, but no, they're not. They're a derivative of money. So a run on the central bank would be people taking their gold out of dollars by getting rid of dollars and buying gold, right? At some place like Miles Franklin, as you know, when everybody does that at the same time, nobody sells any, and then the merchants are stuck with it. So that's the end game. Well, not stuck with it because we can trade it for other things, but so they can either print more and then people run after gold, or they can print nothing and then all the debt defaults, and then what happens then is that the money supply shrinks so drastically as the defaults go in a domino effect, chain by chain by chain, all the way back to 1971 when gold was $35 an ounce. We end up with gold at $35 an ounce, except its purchasing power in dollar terms goes through the roof in the same way. So, either way, let's say in a hyperinflationary scenario, a house sells for 10 ounces, whatever, 5 ounces of gold, whatever the number is going to be. And then in a hyper deflationary scenario, it's the same thing. A house sells for 10 ounces of gold for $350 instead of 30, three. I thought that was a pretty good comparison. In the 1970s, right, 1971, Nixon closes the gold window, and then all the gold and silver bugs who understood what real money was back then, and a lot more people understood what real money was back then than now, because we've been so separated from it for so long that we don't even know what it is anymore. Even I don't. I mean, I know intellectually what it is, and I can put the concepts in my head, but it's hard for me to understand that you take a silver coin, you give it to somebody, and that's money, and you pay them, and it has nothing to do with the name on the coin, it has to do with the weight of the thing, right? I've never experienced that before, but I'm going to get back to it. So the 1970s, 1971, he closes the gold window, and then gold and silver don't do much for a year. They even go down. And the gold bugs are like, oh, what's going on? This is crazy. This doesn't make any sense. And then the Keynesians are like, well, we told you that. The reason that people have demand for gold is because of dollars, not the other way around. And then, we're like, what are you talking about? And if Bitcoin existed back then, it would be like, that would still be a popular thing if it was in the 70s because of the closing the gold window. But I digress. We saw that from 1972 to 74, gold and silver went up into what was at that point a parabolic top. I don't remember exactly what the number was, but it was the highest ever seen for either metals at that point. And then for 5 years, silver did pretty much nothing. It went down. It had a bottom 2 years later, I think in 1977, 76, 77, something like that. It took 2 years to bottom, and then it slowly climbed its way back up until 1979 when it hit the 1975 high. And then 1979, 1980, we all know what happened. Everything just went crazy. So I'm seeing the same pattern now that if we mark 1971 as 2020, when there was like a sort of a monetary reset, where it's not the exact same thing, nothing ever is, but if you count that as the beginning, then we made a high into 2021, a double top, let's call that 1975. And then we went down into 2022, just 2 years later from 2020. Let's call that 1977. And then we should be around 1978, 1979 right now if patterns repeat. And markets do spiral. They have repeating patterns. Doesn't mean everything has to be exactly the same. Doesn't mean that we have 1 year left exactly because it has to be 1980. But the point of these historical comparisons is to remind us that markets don't always do what they're logically supposed to do immediately, but in the end, they always do. So we just have to keep that in mind and understand conceptually what reality is, which is gold and silver are money, and everything else is based on that. And we'll get back to ground level pretty soon, I think, because things are spiraling out of control politically, socially, economically. Egypt is now hyperinflating right to the west of me. The Egyptian pound was just allowed to float, and now there's hyperinflation over there, hyperinflation in Lebanon, hyperinflation in Syria. I don't know what's going on in Jordan, but like war over here, nothing is calm.
What do you think of Alistair McLeod's take? Do you agree with him? Is silver the opportunity of a lifetime, or will Bitcoin outperform everything? Post in the comments section down below your opinion. Subscribe if you have not yet done so, and check this video right here because you'll love it. I see you on the other side.